Hello, and welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I'm joined by Casey Quinn. Casey is a CPA, fantastic real estate investor with tons of experience and a really solid track record, turned owner of a CPA company that works with real estate investors. He has a ton of insights about how to use your financials as a real estate investing company and how better and more accurate reports can help you get more dialed in your business overall. I'll see you there. Casey, welcome to the podcast.
Appreciate you having me. I'm excited to join you. Let's talk some business.
Yeah, we mentioned this has been a long time in the coming. I want to say we've known each other a couple of years at least.
And I even think we've had it scheduled a few times too. And I think there's different things that come up, mostly probably on my end, I'm sure.
I'm sure I'm equally guilty, whatever the circumstances. Isn't that funny though? You get to some point where you're like, I can't remember if it was my fault or not, but like, somebody's fault this happened.
Yeah. We'll just say sorry and get it done anyways, right?
That's right. Yeah. So excited to be here. And because I've known you for a couple of years, during those couple of years, you definitely stood out as somebody I look up to as an entrepreneur, as a real estate investor, and honestly in the few different businesses though, even beyond that. So yeah, I'm excited to get some of your perspective. For anybody who's listening to this that doesn't know who you are, what your background is, what's the short story?
Yeah, I'll keep it as short as I can, right? I'll do the 30-minute. CPA by trade, was in corporate America for a good 10 years. Public accounting, bounced around, and then I actually got fired from the CFO job in real estate. I was there about 10 months. And that was when, like most of us, to become entrepreneurs, right? It's like we want to control our destiny, control our fate, and not let it in the hands of others from an entrepreneurial perspective. Never really thought I was going to be an entrepreneur until I got fired, right? It was kind of a burn the boats. I didn't burn them, they were burned. And so, I went into real estate in May of 2019. We bought our first single family investment property and have since built about $120 million real estate portfolio. Over 6 years, we did that. And in all of 2025, we actually weren't buying a ton, but we still managed that. It's about 11, 12 million rent roll. A very nice portfolio here locally where I live in Pittsburgh. And since then, from that, right, we really kind of started building out ancillary arm businesses from that, operating companies that produce cash flow for us. I tell everybody in the space, right, being a CPA and understanding real estate investment, don't do it for passive cash flow. It's not real. Number one, it isn't passive. It's actually active. And number two, a lot of times it doesn't produce you the cash flow you think it's going to produce because of CapEx. And so really, it's like the portfolio building is about the wealth building and the tax benefits, right? And so, I learned that the hard way kind of 3 or 4 years in, particularly when the market changed. And so we had to go to work, right? We had to go to work building operating companies. And so we've got a nice big size property management company that we had built about 3 years ago. I've gotten into accounting, right, as a CPA. So we launched a CPA firm, a partner and I. We've been scaling that business for about 3 years now. And then last year, I actually launched a lending company and a private equity platform. We're doing active M&A deals, but, more importantly, predominantly doing hard money loans and building that via CPA, via accounting, balance sheeting, what we're doing, right? So, what I would tell you is at a high level, my summary is, I've gotten really good at culture and strategy around people, but then more importantly, I run the businesses based off of numbers. And that's where I've gotten really good, right? And I think people sometimes tend to forget that, right? Sales is everything. You've got to have people to close, right? So marketing's super important, and you've got to close them and sell, right? Or you don't have anything, but at the end of the day, right, you've got to make enough money to survive, right? Staying in the game is the key to the game, right? Staying long enough to win. And producing enough profit is the most important thing. And, what I've found in the industry is no one does that for whatever reason, right? Very limited companies are actually paying attention to their bottom line, their KPIs around the financials. And so we've set out on a mission to really help as many people as we can do that, specifically in the real estate investment space, because that's what we're in and that's what we know. And that's how we've been able to build the portfolio. And so we're really after trying to help everyone across the world do the same. And of course, we want to make some money along the way, right? From a business perspective and entrepreneurial perspective. So at a high level, that's kind of where I'm at. I've been in the entrepreneur about 7 years, and it's changed my life for sure.
Yeah, I believe it. Yeah, I was talking to someone on my team the other day, and he was like, well, there's kind of two types of entrepreneurs. One type is the kind that they're like, I'm going to build a business. And then there's the other kind where it's like, oh shoot, I'm making a lot of money. Maybe I have a business.
Yeah.
And then, they eventually kind of fall into it. And I'd hypothesize maybe you're the first type and I was the second because you have actual experience. You actually knew some things going into this.
Yeah, it's funny, Brandon. My introduction into doing all of this was, I had zero real estate experience, zero. took a CFO job at a real estate company, thinking it was going to take me a while to learn the industry. Well, I did in that 10-month period. The books were a mess. I fixed them. I started running a company, but what I did is I learned how to BRRRR model, right? I learned how to BRRRR model invest. I was never wealthy. I didn't come from wealthy families. When he fired me, I was actually, in about $200,000 worth of debt. I had just gotten married, bought a house in the suburbs, and I had actually taken a loan from the business that I had to pay back from the owner. So it was a rough time. But for me, I learned the mechanics of how to BRRRR model invest. And that's why, to your point, I became the first investor of I'm never letting anybody do this again. I'm going to build a business the right way from scratch while I'm in charge, right? And that's what allowed me to kind of have that success of I've seen it now. I know how to do it. Let's go do it now. And it was a struggle, right? Year one was rough. I made no money, right? I had no money. I made no money. My wife was still working, luckily, full time. So we were able to kind of pay the bills, but there was no Starbucks coffees, right? Early on in entrepreneurship, I'm sure you can relate to that, right? We all can, of just, early on, you got to do what it takes if you want to have the freedom to be able to make whatever decisions you want in the workplace.
Yeah, totally understood. So tell me this, your background being different than most, not a lot of CPAs that go into real estate investing. I'd say they're pretty few and far between. So if you were to summarize how you run your business, specifically, let's talk about the real estate investing business.
Yeah.
That's different from how you feel the average investor runs it. That is fueled by that background that you have, that initial skill set that you started with. Because like you said, you knew nothing about real estate, but you also had a lot of foundational business skills that you took to. What are those skills and how do they make you a better entrepreneur in this space?
Yeah, I think it's twofold, right? I think from corporate America, what I learned the most is delegate and elevate. And I think for the most part, real estate investors really, really struggle with how to build a team and when to build a team. Whether you're turning properties as a real estate investor, like a wholesaler, a fix and flipper, a wholesaler, all the words there that, all the lingo, you still got to build a team at the end of the day to really build the business, right? Otherwise, you're just a hustler. So I think what happens is the difference of my perspective and what most people are is I came in wanting to build a business from day one, where to your point, most people go in and they're just hustling, making money, and they think about it that way. And it's really difficult over time for them to get out of the hustler mentality, right? And what I mean by that is they're doing everything, right? And they're not really logically thinking through how to do something, set it up, and then hand it off, but hand it off the right way in terms of delegating, right? And I think that's where most new entrepreneurs struggle because they just don't have experience. But in corporate America and public accounting, you get that experience because you're climbing the corporate ranks, right? So the moment you get promoted, all of a sudden, right? So my third year out of college, I had staff working for me, right? I became a senior and I had staff. And so my job was to run public accounting audits with a bunch of people that worked for me. So I learned very early on in my career how to delegate. And I think that's the biggest challenge entrepreneurs in the real estate investment space face. So I would tell them, right, early on, the better they get at that and the more they try it. A matter of fact, I was on one of my inner circle calls with a student and they were talking about their first hire and are they ready to hire a VA? And I said, I don't care if you are or not, you should do it. Because you've got to start learning how to delegate, right? You've got to start learning how to manage people. They've never done that, right? And so it's important, because now for me, it's like practice, right? It's like a sport, playing basketball. You shoot enough. For me, managing people, hiring, firing, finding the right talent, getting them in the right space, getting them to their highest and best use through practice. I've had a ton of it, right? Our hustlers in our space get it wrong all the time. And that's what it takes to go from hustler to CEO. And then I would tell you the second thing is, most entrepreneurs come from the hustler world and, they dropped out of college or various things. They don't come from corporate America. And so they're hustling. And so all they ever focus on is sales and marketing, right? The front end, I've got to get more leads. I've got to close more leads. Where the approach we took from day one was really, let's really understand the financials and the math behind everything that we're doing. And it's not about making the next dollar. It's about leverage, right? It's about leverage of debt. It's about leverage of talent. It's about investing in people and understanding the return you're going to get. And really using the data and the math behind the numbers in the accounting, right? Because look, at the end of the day, business is dollars in, dollars out. Every dollar out, the ideal strategy is that more dollars come in. That's it, right? If you really think about it, and then leveraging dollars out to people, marketing companies, accounting companies, whoever it is. And you've got to produce the income return from it to make it make sense. And so we've always approached it that way. from my background, right? Where I think a lot of people, again, come from entrepreneurial, come from sales, right? Most entrepreneurs are salesmen turned entrepreneur. It's just, what it is. And they don't have that unique kind of financial skill set to really think about investment in, investment out, KPI world around all of those things. So to me, those are really the two big things. It's the people side, it's the delegate and elevate approach that I bring that I think a lot of hustler entrepreneurs struggle with. And then the other side is really using data and math to drive business decisions and get you more information in your skull, right, in the brain to have more to make a more informed decision, right? Because at the end of the day, we don't make decisions because we're scared, right? And we are scared because we don't have enough information and scared of the unknown. The more data we can get, the easier it is to make those financial decisions. And right, that's what allows us to do that. And I think it takes years a lot of times for sales folks turned entrepreneur or people out of high school, college that go right into entrepreneurship. They struggle to develop that, where 10 years in corporate America, particularly in the accounting space, really allowed me to have that skill set to be well ahead of my fellow entrepreneurs getting into the space at me at the same time.
Yeah. So I want to dive into both those things just a little bit more. I can tell you, the person you described who got an entrepreneurship right out of college. I mean, that was me. I started this company as a sophomore in college, right? And all the stuff I didn't know was a massive list. I mean, it still is, but so I get that. And I feel like I've been through a heck of a journey with delegation, right? I've even gone through a lot of stages where I was like, oh, I got it figured out, only to realize like later, no, I didn't have it figured out. Like, I think especially at first, like the first time somebody does something that's not you, it's like magical. That
Yes.
thing got done and I didn't have to do it, right? And then you one day learn like, oh, I delegated those things that ended up going bad eventually because it wasn't done right and I didn't know about it. Or you learn, or you like, one thing I got caught up in is I'm like the guy who's delegating all this stuff. And I just view my job as like being the guy who delegates this stuff. But I'm not focusing on delegating of the stuff and delegating I'm not like leveling up in that way, right? So it's like everybody's a task monkey, right? I'm delegating mostly tasks, but not like projects and not like results, right? So
let me respond to that, right? Because I think this is important. It's a very important topic. And by the way, I'm in the same boat as you. Like, we all struggle with this. It's hard, and that's the lifelong journey of an entrepreneur. What I try to focus my brain set on when I think about it that way is really kind of twofold. One is we've got to develop leaders at the end of the day, right? So when we say that the issue comes back to us, it's because we didn't do a good enough job developing that human as a leader compared to just a task manager or a doer of action, right? A maker and a manager. Hermosi, talks a lot about makers and managers, and people are different. And so understanding the human mentality of a maker and a manager, meaning a maker is a task doer, and a manager is someone that can sit on top, delegate, and have the social wherewithal of managing and leading people. I combine that with the EOS framework around LMA, which stands for lead, manage, and hold accountable. I think that's incredibly difficult for us to do as entrepreneurs, because when we start to build a business and we start to delegate or figure out how to delegate, we want it to be done right. But at the same time, we know that we're scared to let go, but we're also scared to piss people off that work for us, right? Because we've got this person now doing this work and we don't want it back on our plates. And so we don't hold them accountable well enough, right? And so for my journey so far, accountability has always been the issue. I like telling someone to go do something and teaching them how to do it, and then just expecting them to hold themselves accountable to do it. And I've learned most humans aren't that way. And so you've got to create the mechanisms to hold them accountable at the end of the day, to your point, where you realize months later, oh my God, they're not actually doing what I thought that they were doing and they should be doing and what I taught them to be doing, because we don't have a good mechanism to manage and hold them accountable on the back end once we do delegate it, right? So the way that I think about it ultimately is like, how do we create and delegate so that it never comes back to us again and it's done right? And that's a combination of process accountability and then developing and or hiring the right humans in the first place that can take those things on. And that's the challenge, right? Which is why I always say you've just got to have more practice. And no matter how much you recruit, I think recruiting is the most important thing in the entire world of entrepreneurship, because people are so important to everything that we do. And I don't care about AI. I get it. It's coming, but it's still man and tool versus the world, not tool versus the world. And so you've still got to have the right people managing AI and managing the right tools and managing the processes. And so you've got to go get the right people. That's so hard to do. And no matter how good you are at it, you're still going to make mistakes, right? You still don't know because you have the human element, right? At the end of the day, if you go buy a computer, you generally know what the computer is going to do for you. When you go hire a human, no matter what they tell you, when they get inside your organization, it could be different. And not only that, it changes over time, right? That's the biggest challenge that I think entrepreneurs face, bar none, is people change over time. And so they might have been great for the role for the first 2 years they've been in the organization, and all of a sudden they aren't anymore. And then all of a sudden we kept them for 2 more years in that role because they used to be good at it and they aren't anymore, whether the business grew or the human changed, right? Maybe they had kids and now they're not working as much, or maybe, they have different passions and different interests, right? You never know. And that's the challenge of human management and human capital. But to me, that's why it's the most important thing there is, because you could 100x your company with the right people, but also you can take your company out of business very fast with the wrong people. And generally we struggle at, we understand we need to hire. Where we really struggle is when we need to fire and or move them in the positions that they're in. And then all of a sudden, right, 8 months went by and we've had this human that has done nothing for our organization while we've continued to pay them. And it's too late at that point, right? And it's like, I wish I'd have known that earlier. And that's the lifelong lessons that a good entrepreneur will continuously always learn and never actually think that they're good at it, because we're really not. It's super hard, right?
Yeah.
Like, that's how I think about it. So that would be, I think I answered what we were talking about, but I had to go down that tangent because it's so fresh in my mind, man. It's every day of my life, right? We've got about, I don't know, 60, 70 people across the various organizations we have. At some point, I think we were up to close to 100. We've got to scale back some, scale back up. And that's the game. Like, that's the game that we play every day, is the people inside of organization and their ability to produce an outcome that we're desiring, right? At the end of the day.
Yeah. Yeah. I feel like I'm curious how this compares to your experience, because they're, maybe completely different because you, again, knew some of these things. Like when you started the business, I felt like every role I took in my business was a role I had never done before. Right. Like,
Yeah.
never did I reach the point where it's like, oh, I know how to do this. Like you probably eventually got to the point where you have to do some accounting stuff for your business. And you're like, oh wait, I got this covered.
I got this. Yeah. Yeah. It's funny. I'm doing it now. I've got a region CFO and I got a new CFO that doesn't start till mid-February in my parent equity company. And so I had to build our parent equity company's 2026 plan. I'm just like, oh my
goodness.
I hadn't done that in a few years, but it's kind of like riding a bike, but at the same time it isn't,
Yeah, you would probably.
But it's funny that you mentioned that. It made me kind of reminisce. I think back to early on. I did the leasing. I was doing maintenance. I was taking maintenance calls. I was leasing properties. I did everything in the company. And to your point, a lot of it's all for the very first time, and we got to figure it out.
Yeah,
we're good at that though, right? Like if you think about your career, you're good at that. That's why you're where you're at now. The harder challenge is being able to produce other people that produce other people to do it. That's the biggest challenge, right? How do we create managers and leaders in our organization? And I think that's where most businesses stall and fail, right? Which is why you have whatever the statistics are, where most businesses go out of businesses in the first 5 years, right? Because they don't know how to take it to that next step of creating leaders that lead.
And there's, I'm sure, a million things that can be done in the business to make that happen. I like what you said about recruiting being an important part. I could tell you my perspective. I struggled. I actually recently kind of identified recruiting was my problem for a pretty long period of time. Right. And
Okay.
Actually when it was happening to me, I didn't know that recruiting was the problem. And in hindsight, I'm like, well, recruiting was the problem, right? Because I wasn't good at it. And because I wasn't good at it, I wasn't creating the volume of applicants required for me to be able to look amongst them and know what true talent looks like. Right.
That's right.
Because if you just get some pretty decent applicants, then you miss what often happens in recruiting. I'm sure this happened to you tons of times, where eventually you talk to one of those candidates that changes your whole perspective on it. You're like, wait, actually that's the bar, because you didn't realize the bar could be that high. Right.
It's even funny too. There's been instances, in the recruiting process for a specific role that we have, where during the recruiting process and the conversations that we've had with potential candidates, we've actually changed the job description and changed the role itself, because we realized this is the wrong role once we started interviewing people. Now that's a little bit more rare than I tell my team this all the time, and we always talk about this, and I get frustrated with recruiting firms, and we don't really use them for these reasons of,
Yeah.
I don't know the exact avatar that I want yet. I need to interview some people and I need to have some conversations. I need to ask the right questions in order to really define and dial in the avatar that I'm looking for this specific role. And I think a lot of firms get that wrong, right? Recruiting firms get that wrong. They're really looking for this right avatar. They want to give you the perfect person, human one or human two. It's like, guys, it's never that easy if you want to do this really the right way. Sometimes you hit a needle in a haystack and you get lucky, right? Because even if they have all of the right skill sets and they have the experience and they have all of those things that they potentially are that A player that you want, there's still this entire world of culture. They also still have to fit in with your vision, your core values, what you're trying to do, your mission, the people that are already inside of your organization. And, people throw culture out there a ton and they take it for granted, which is a problem. But it's like the culture is not the ping pong table in the center of the office, right? The culture is how we treat people. The culture is how we act every day. The culture is how we live our lives inside the organization. And I think a lot of people get that wrong, that they don't care enough about that, right? So then you go out and you hire this CPA or this recruiting firm. They bring you this candidate. This candidate's perfect, fits all the metrics of the job, and they have experience and they talk well. Then you hire them, and then 2 months later, they are literally, no one in your kind of company likes them, and everyone wants to fight every day. Well, clearly we can't keep them, even if they are an A player, because they just don't fit the company that we have and the morale and the people and the organization, and it doesn't work. And it's like, firms don't know your culture, right? Like external firms don't know your culture. So that's step one. You're never really probably going to be able to deliver me on the first try the candidate that's going to fit in my culture. And so I need to have multiple, conversations. And so for our organization, what we've done, right, is, and we still do this to this day, and even in our subsidiary companies, is where my assistant gets on the phone with them first because she knows what we're looking for, right? She's been with me 5 years. She ran my HR at City Life for a while. She knows exactly the culture that we're looking for. So she doesn't look at them or talk to them for anything that has to do with their resume or their job credentials or their criteria, but will this human fit in our culture? And if so, okay, cool. Now let's move them to me or to the recruiting manager or to the hiring manager, to whoever is next in the process. But first, let's make sure that they at least a little bit fit. And then jobs that we have, we know we're going to get a ton of resumes for, social media manager, for instance, is a perfect example, right? To touch on something extremely well. Look, there's a lot of people that apply for that role right away. Okay, so, a role like that, what we're asking our team to do is we're asking them to send us a 3 to 5 minute video, right? To say, look at our website. Do you fit in? Get a feel for who we are and send us a 3 to 5 minute video more about yourself and why you think you fit in with our company, right? And we're watching all those before we even move into the next steps. So we do that, and we also use predictive index, which is PI, to get it's a type of personality assessment. We use that really, we use it for everything, for all recruiting too, to get an understanding of how they naturally think and if that fits kind of the role, right? Are they super aggressive? Okay, cool. Is that more of a sales role? Are they super conservative? Well, they probably shouldn't be in a sales role if they're scared to talk to people. So
Yeah. I agree with everything you've said. Here's what I'm trying to figure out in terms of I'm trying to think of some advice, because I can tell you recruiting was the problem, and it was a problem because didn't bring on high enough level people, and then we didn't get rid of those people fast enough when they weren't level, because we didn't.
That's everything everybody's
problem with.
Yeah.
Right.
Listen, you're not alone.
It creates a big problem. We relied on a lot of agencies. Like there was one role where for us, when we first had to hire for it, we worked with 5 different recruiting agencies over 18 months, still didn't find a person. And I was like, what the heck is wrong with this situation? That was when it was really a hard job market a little while ago. So, a lot of things have changed it, but I can tell you for us, an in-house recruiter has been a game changer.
That's great.
But it's hard because it doesn't make sense as employee number 3 to have an in-house recruiter.
It doesn't.
Unless you're going to grow really, really fast.
Yeah. What I would tell you is I would argue that you need to do it yourself until you're large enough that you can delegate it like anything. But I do think that person that's handling recruiting should be the person that's kind of super close to the CEO for as long as you possibly can. Evidence our company, I firmly believe that, right? The person still doing all of that for us is the only person that's allowed inside of my, 2,000 square foot personal office that I have, right? It's my office and her office and no one else in here. Like she's next to me. And for those reasons, right? She just always has the feel for exactly what we're looking for. And she does everything, a lot of other things, right? So even if you do it earlier on, It's like you have an HR manager, maybe like your administrative help, right, doing it. But that human is the human that knows your culture the best is the person that should be doing a lot of that on the front end for you for as long as possible. And I think for most of us early on, that's the owner, right? That's the entrepreneur is trying to grow the business and hire the people at the end of the day.
Yeah, well, there's different parts of it too, right? Like we have, similar to you, we've done like a culture screening interview thing. I think that's one thing that's been crazy helpful is you just have one interview where like this is only about culture. And then it makes it so nothing else kind of like gets into it. And I don't know if you guys have built like your framework for that. We've kind of done that where you sort of like, we're ranking people on the different values and stuff like that. And like
Yep.
it's a really big piece of it. But also there's a big aspect of recruiting that's like most of our really good recruiting comes from outbound recruiting, which is just it's a hard game. Like, it's hard to pick up the phone and spend, but I've done it. Like, that's how we found a lot of people is I've just like spend my evenings like pounding away, cold calling people off of LinkedIn, trying to convince people.
We have to. Trust me, we do that. We come in direct. So we do all of those 100%, right? Especially if we're trying to hire local.
Work. Like when you have a
Yeah.
recruiter, it's like, okay, that's that person's job, but it's just so hard to find the capacity in the company to do that stuff when we don't have somebody to do that stuff.
It's hard to prioritize it, right? Because we don't realize while we're growing up in the business space, the importance of it. That's the challenge, right? And now you're like, it's like we're literally sitting here talking about it. You're realizing the importance of it because you made all of the mistakes along the way. The cool thing is, right? Like everything's about compressing time. And so everybody listening to us right now should take a mental note how to compress time significantly in their business. Stay focused on their own people, stay focused on recruiting, and make sure you're bringing the right people yourself for as long as you need to be doing that before you delegate it. And certainly don't not care, right? The people are the most important thing in the business. And it's super easy for us as we're growing to not think that, right? Because we're always thinking about how do we get the next sale in order to hit payroll or to pay whatever expenses we have, right? Like that's the reality of it. I know that was me for the first couple of years. Like, I don't give a shit. I'm just trying to make payroll every week. Like, I'm just trying to survive and buy my coffee or whatever, right? I don't have time to be sitting here recruiting people,
Yeah, that's crazy. I will say, if I had a regret, it's that it didn't hire an in-house recruiter as early because I thought it was like a big thing that only like really big companies need. And we found like a part-time recruiter, and a part-time recruiter honestly is, I think, perfect for a lot of companies that are like kind of small because you could find somebody like in our case, somebody who used to work full-time for a company and then now she just doesn't want to work full-time as much because she wants to spend more time with her kids, but like incredibly skilled, just a little bit more focused on home right now. The number of hours puts it in check where it like matches the number of people we need to recruit regularly. And we're you end up paying a lot less than you do with agencies, plus getting it all like under your control, and it ends up being getting you better candidates. Like I would have done it years earlier in hindsight.
Well, if you think about it, right? Like if you go hire a firm, I think they charge what 20 some 30%. So if you go hire $100,000 a year person,
Yeah.
20K. So if you hire 3 people at $100K a year, that's 60K. That's probably a full-time recruiter right there alone, right?
Yeah.
Or
Yeah, honestly, if you're hiring 3 people a year, it's basically covers like the cost, which is wild. I mean, most companies that have, let's just say, at least 7 or 8 or 9 people are hiring 3 a year, especially at the beginning. Anyways,
well, you're going to make mistakes. You're still making mistakes no matter who's doing recruiting.
Exactly.
So if you want to land 3 people this year in 2026, you're probably going to have to hire 6 to 7 to get your 3 right people at the end of the day, as long as you're effectively managing correctly and pushing people out the door that don't fit because it was the wrong role, the wrong hire, whatever it is. So you're looking at 6 or 7 new hires to land 3 really good, talented people, right? But I would tell you even more importantly, the problem is they're not building 2026 budgets and pro formas to understand that they're going to need 3 people, or that 3 people is the right amount of people to hire in the first place, right? And so, it goes back to the end of the day, what are we doing to plan for our future, and how well are we doing that? And most small businesses and medium-sized businesses aren't doing that well enough because they're just trying to survive. And a lot of them don't even have, what I'm learning in the industry is a lot of people in the real estate investment space don't even have good books in the first place to be able to predict their future, right? And that's the challenge that we face when it comes to growing and scaling in the people space.
Yeah, I mean that's definitely a rabbit hole I want to go down. I'm sure everybody listening to this has had like the pain of lack of financial clarity. I could tell you, you would laugh if you saw me like years ago on April 14th, like exporting all my bank statements and trying to like basically do an entire year's worth of bookkeeping without a bookkeeping software, like the day before I need to do something with my taxes. Like, because that's,
You are
you know,
not alone. There's
everything,
there are a lot of people doing that still. Like it's
yeah, when there's everything else that's important in the business, it's kind of your last thing that you focus on. But I guess the longer I've been in business, the more I've thought like it's all those, like Stephen Covey calls them Quadrant 2 activities.
Mhm.
Things that match the criteria of yes, they are important, but no, they are not urgent, are the kind of things that if you can nail it, you start to get a lot less of what he calls Quadrant 1 activities, which are the urgent, important things that
Yes.
pop up, that are just those fires
Yes.
that you're always putting up. And
Well, that's what happens in this world, right? That's exactly what happens. They're in quadrant two, and because you don't address quadrant two, they always end up in quadrant one, and it's a major problem, and therefore you're not out ahead of the business, and that's why you can't scale, right? Like that's the biggest hindrance. Like that's the like quadrant two, quadrant one is literally the biggest hindrance of why people don't scale. They don't do enough in box two. They're always in box one. They can't get themselves out of box one, right? At the end of the day, and box one isn't actually moving the business forward the way that it should be moving the business forward. It's just putting out fires. By the way, I don't care how big anybody is, you're always still going to somewhat be in box one sometimes. I know you are, I guarantee, I know I am. Like we all are spending time in box one, for better or for worse. What I would tell you now, for me at least, and as I continue to grow, I want box one to continue to be more and more people. Like really focus and dial in on major people problems that come up, right? All of a sudden someone's not performing. We've got Johnny and Pete that are fist fighting because they have competing priorities and whatever it is, right? That's where I really want to spend my time. But I try to eliminate everything else from box one, right? Like at the end of the day,
sure.
only people are really allowed to come into box one and create major urgent changes. And I've had this is today's a Thursday, right, that we're filming this. And, most of this week I've been dealing with that exact urgent box one on a couple people issues that all of a sudden came out of nowhere. When I started the work week on a Monday, I had no idea that this was going to come up. And now all of a sudden we've got a major people issue that, I've had 8 meetings this week so far on it.
Shoot. Yeah, and that kind of stuff will happen. So, but let's talk about this, Greg, because I could tell you, old Brandon, who was in his Excel spreadsheet on April 14th doing his bookkeeping, exporting his bank statements, he didn't know what this actually can look like. Like what? Because at some point you just get so used to living in chaos that you never even have that moment to take in the vision of what this actually could look like if you figured all your stuff out, right?
Yeah.
And what I would bet is I'm like further along that path than I was, and you're probably like many more miles further on that path than I've ever been, partially based on your background and you're a little further along in business too. So help me understand, if I'm just like the average real estate investor, let's just say the average person who works with Accruity to do their tax and accounting type of stuff, like where do they start? But like what is that thing that you're looking for? Like paint the vision of where you can end up and how that affects the business.
Yeah, sure. Work backwards, right, is what you're asking. Happy to do that, right? And maybe at some point we can do a presentation. I put on a really good presentation around what I call the 5 pillars of a strong back office, right? And maybe we can do that one day for your listeners, right? But I kind of call pillar 5, if you will, the back end, where you're essentially working from a KPI dashboard only, and your financials essentially almost become irrelevant, right? You're really looking at variance analysis of what you thought was supposed to happen and what actually happened in real time and at a KPI base level, right? So an actual indicator of what you thought was going to happen, not a leading indicator per se, although those are helpful, but actual indicators of like, hey, look, I thought I was going to net 200,000 this month. I only netted $160. Here's the exact reason why, right? And you're getting that in real time at the end of the month is a perfect example, right? And so what I call is really a couple things. You got to have a budget. And so you create, a plan or a budget for your future. And you're always comparing your actuals to that every single month, right? So in our organizations, we're getting a report at the end of every month that says, hey, you were expecting to do this, here's what you did, and here's all of the reasons why you didn't do what you expected to do, whether good or bad, right? From a variance analysis perspective. And then the same with the KPIs, right? What we expected to pay $2,200 and acquire $2,200 acquisition costs for 12 customers in month 6 of this year. And all of a sudden it was $3,200 that we acquired them. Okay, well, why, right? Like, and so we expected this, it ended up coming in way more. The analysis comes in, a report comes that says, look, here's why. You ended up spending an extra 12 grand with Bateman Collective, and you weren't expecting to do that, and therefore now your and you didn't get any more customers from it, and therefore you spent an extra $1,000 per customer, right? And you're getting that in real time every single month. On top of that, right, then you have your team really building you a pro forma. What I mean by a pro forma is your budget quickly should get stale, right, every single month, because things change, business happens, you make pivots, people leave the company, people come in, all of the world of the business that we say. So now you're reforecasting, right? You're recasting is what we call it in a perfect world, where, you know, maybe after Q1 of 2026, we know month 4 through month 12 are going to look very different than what we thought in January. And so, okay, cool. Let's now have a running pro forma where we say, now this is what we really expect. And now we're looking at it. What did we originally expect compared to what we expect now, as well as what did we originally expect compared to what actually happened, as well as what actually happened compared to what we now had thought was going to happen, right? And you create a mechanism to really be looking at that through KPI dashboards and really specific variance analysis reporting at the financial level, right? That's what a really good, sophisticated end product looks like. It's just really hard to get there, right? Because if we pivot and go all the way backwards now, right, it starts on basic bookkeeping, timely and accurate and complete. And the reality of it is most small businesses don't even get that correct, right? So you got to get all of those things correct. Once that's correct, now you got to close your books, right? Nobody closes your books, right? The reality of it is, unless you're hiring an outside firm or you bring in talent in your back office early on, any entrepreneur out there trying to do the books themselves or have a basic bookkeeper or outsource it to a BA, you're not really closing. And so you don't really know if you have accuracy and completeness at the end of the day. You don't know if numbers are going into the right accounts. I mean, most of our clients, when we first bring them on, it takes us 6 months to really get all of this completely accurate and get it fully closed, because there's just so many transactions that were not booked in the right areas. They're on the balance sheet to P&L. They're not, you know, you're booking your Starbucks to repair and maintenance costs. And it's like, I don't care if your Starbucks is a business expense, that's cool, but we really need to understand your real repair and maintenance cost so we can analyze it as a percentage of revenue to understand what you're really spending in maintenance on the property. We can analyze it compared to last year. Do we have HVAC problems, right? Like all of the things you need to do to analyze it. Well, it needs to be right. It needs to be complete. So like that's really kind of the step 2. Step 3 is, okay, cool, thanks. Now let's get reporting. Now we need to see the results, right? So you get really good financial faces of reporting. I always call there 2 ways. There's managerial reporting and then there's financial reporting. Financial reporting is much more external facing. Managerial reporting is much more reporting that allows you to make better decisions, right? It allows you to manipulate the data in a way that helps tell the story that you need in order to make actual decisions inside of your organization, which very much can look very different than how a bank wants to see it, or, you know, an investment partner wants to see it, or whatever, right? External facing kind of good financial statements there, right? That's 3. 4 is really building the KPIs, the dashboard, and understanding, hey, what are key performance indicators based on these financials, with the key there really being how much of this can we tie back into operations, right? Like that's all at the end of the day the key, because the people that are driving revenue and driving profit in the organization don't give a shit, right? They care about their operational metrics. And so it's like, how many leads did I generate? Well, cool. How many closes did I have? Well, cool. Well, what did it actually make me? And so we want to drive your KPI results back to operational KPIs and tie them together so we can give more managerial based feedback to make better decisions on where you should be spending your money or where you should be spending your time, right? Those are our 2 resources, money and time. Where are we spending it, right? Then ultimately gets us to what I call that pillar 5, which is, you know, really good, robust variance analysis type reporting with a robust KPI dashboard that you're using to run the business timely.
Yeah, I hope everybody listening here isn't like listening at 2x speed while they're taking their kids to school and just like missing the fact that Casey just basically outlined like a 5-step like master plan of how you go from absolutely sucking to having incredible financials. Like there's so much depth in what you just said. That's really
the key that I try to tell everybody, right, is like, look, I don't care if you use, you know, my firm Accruity, you have your own firm, you have it in-house, you're doing it yourself, whatever. Just make sure you're doing it. But more importantly, make sure that if you're not the one doing it, which I highly advise most entrepreneurs not to be the one doing it, to be honest, at the end of the day, right? They didn't get in entrepreneurship to handle their back office. They got in the entrepreneurship to make money and grow their business. You just got to understand you got to understand what you need to have somebody do. And then you've got to be knowledgeable enough to learn how to use it. And that takes practice, right? Like anything, if we want to become experts and we want to become an expert business runner, you've got to spend time learning your financials, right? Whether it's researching it and learning it that way, whether it's just really spending a lot of time. So a lot of people that join my coaching programs, I always just tell them like, hey, your homework is spend 4 hours inside of your own financials next week. Like, I don't care about anything else. Just spend 4 hours staring at your stuff. I don't care what you do. I don't care how you stare at it. I don't care how you try to manipulate it. I don't care about any of it. Just spend time in it, right? And if you don't understand something in it, cool, ask ChatGPT, right? Like, it's going to teach you. Spending time practicing on how to understand your financials, and you'd be amazed at how much they quickly develop and get better at decision making of where I should spend money, right? What vendors I should use for lead gen and things like that. It truly changes the game. So if you're not good at this stuff, I get it. It sucks. Like for entrepreneurs and salesmen specifically, they hate it. You don't got to do any of it. Just learn how to use it to make decisions. That's the key.
Yeah, I mean, that makes a ton of sense. I could tell you also, like a fun little like no man's land that I spent a ton of time in is I have it all and it's wrong.
Wow.
Which I feel like is a step that most people take with most things. Like we recently went through that same stage with our marketing attribution. Like, okay, we have no marketing attribution. That's bad. All right, let's get it. Okay, now we have it and it's completely wrong, so it's useless. Okay, that's a step along the path, but it's still completely useless. And then you get to the point where it's like accurate and it's good and it's helpful and all that kind of stuff. But like to me, there's so much difference between having financials that you can 100% trust and having financials that you can 95% trust, because you're going to make big, weighty decisions based on those numbers.
I could not agree with you more there. And even specifically, like, yeah, that's going to happen. If you don't have anything today and you're a listener, well, you're going to have wrong stuff next. It's just probably what's going to happen. Right. And no problem, because you're learning that it's wrong. That's the first step, because you're learning something, right? And you're going to learn how to get it right from there. So there's nothing wrong with that. It's about, right, my number one core value of my life is take massive action, right? You don't kind of being able to do what I've done and grow what I've done without eliminating fear and eliminating, like, you just got to go, dude. The amount of mistakes I've made in my life are crazy, but the value proposition I bring to the table is I'm not scared to do it. And this is the case here, right? What happens at the back office is a lot of people are just scared, right? They're scared to look at their own numbers. They're scared to try to learn how to understand it. They're like, I'm good at sales. I'm staying there. I'm ignoring this as long as I can. It's like, that's not really the right answer. It's never going to be the right answer. And until you realize you need to get your back office in order and understand what's happening in your numbers, you're never really going to be able to scale. Because again, it goes back to, how do you know when to make the next hire? Like, you can figure it out pretty easily when you have nobody in the firm and you want to hire 1 or 2 people in your company. But now all of a sudden you got a big old payroll, and so you're not sure how to make payroll, but you need to grow because you have weaknesses and gaps in certain areas. Well, how do you get confidence to go hire them? Well, the only really way is understanding what your future looks like financially, to say, hey, I'm willing to make this investment in order to know, hey, it's going to cost me X amount of dollars while we onboard them, while we train them, while they're not bringing enough value for the future value proposition return that ultimately the reason you hired them in the first place is so that either 1, they go make value proposition to bring you money, or 2, they do work which gives you more visibility into something or frees somebody else up to go make you more money at the end of the day, which is the name of the game in the business, the world that we're in.
Yeah, I love what you just said, because you're basically talking about this definitely big turning point for me is when, like, because I realized at one point, I'm like, I cannot tell you, like, our big metric is client retention, right? Huge metric for, I imagine for your business.
It's everything for you guys, right?
We use revenue retention as like the financial metric for that. And we have people who are responsible to that, right? Like people who are managing accounts, they gotta be retaining clients, and if they retain clients better, we know it's worth more to the company that person's performing higher on that level. And at some point I realized I could not tell you what the financial impact of the company is going to be if that person retains clients 1% better or 2% better. I literally could not tell you that, right? We're playing these games of like, oh, should we bet this money to try to improve that number, that kind of thing. And we're like, we don't even really know how that's going to impact the business, right? So that's
So what the metric that I would tell you need to actually convert it to, which is along those lines, retention matters, but you're just looking at retention. The way you need to convert the thinking in your head about what metric you really need to look at is your lifetime value of the customer.
Absolutely, yeah.
Right.
It's just the inverse of retention,
It's the inverse of retention, but if you think about it that way, just to explain it to everybody listening, it's really, I always call lifetime gross profit. So you can do revenue or gross profit, but I kind of look at it, I like to look at it at gross profit if we can get there, which is essentially the money you're making from a customer, right? And so I love what's called MRR businesses, monthly, and you're an MRR business. I know that certainly, right? And so when we acquire a customer today, it's really how much money will we make from them over the lifetime of that specific customer, right? And obviously, the more the better. And obviously, as you know, the longer the retention that you keep, the more money you're going to make. But lifetime value also brings in the price, right? Where retention doesn't. Retention is simply how long do we keep the customer. Lifetime value also brings in the price because, again, if you can make 10 grand in 4 months or 10 grand in 8 months, let's make 10 grand in 4 months, right? And so who cares about retention after 4 months if we make all the money? So can we increase price, crush it for 4 months, let them go? Or do we can make the same amount of money over 8 months? We want to make it in 4 months, which is why cash conversion cycle is another huge calc that's got to go into what you're looking at, which is how quickly do we make our money back? And then how quickly can we make more money? And at what point does it start to dwindle down, right? At the end of the day. And so those are the little tweak that I'd recommend making. You probably have that too. It's just, the retention's what you threw out there, but like, it's a big deal for customers because, and especially in our world, like we're in masterminds together. You're spending money to also generate your own customers. Well, you're spending money you have sales reps, you have your own marketing arm, and so, we're spending a ton of money to acquire that customer, right? And so we've got to evaluate what we're spending to acquire them to make sure it's worth it. So retention matters, right? Because lifetime, how long you have them, but the actual lifetime value of the customer is what matters more, because if you're spending 20 grand on a client and you're not actually making 20 grand from them, well, what are you doing spending them? Like, don't do that. You're going to do that.
Well, in some ways, the lifetime gross profit compared to the acquisition cost is basically almost like not from a cash flow standpoint, but I basically consider that like more valuable than my net profit number in my business. Because in periods of growth, it's going to be
100%.
Like that metric will stay super stable, but I know the margin will go down.
Yeah, but and not only that, you have to be able to explain it too, because, for instance, in some of my business, so we actually have external reporters, we have investors, and for instance, in 2025, I spent a ton of money raising capital, spending money to raise capital, right? And so on my P&L, my net profit is a loss. Oh my God, I'm out of business, right? Well, I have money to be able to invest, right? You ask how these companies that are losing money, why are they doing it, right? Tech companies across the country, right? It's because their lifetime value is significantly greater than what they're paying to spend it. And so they know, hey, I'm going to have this customer 2 years, 3 years, 5 years, whatever it is. And so, yeah, today, because I spent the money to acquire the customer, I'm not making money, but I know that I don't have to spend that ever again because I have MRR. And I'm going to have them for the next 24 months, and therefore I'm going to make a bunch of money, right? And so the way that I show that on my financials is essentially I pull that out and say, look, here's what I'm spending to acquire a customer, and here's what I'm going to make over that when I get that customer over lifetime, which is why I can justify this net loss today. I have the money, I'm investing the money in, or I'm borrowing it or whatever to say, look, I'm going to make all this money. And so for us, our investors stay a long time. And so we make a ton of money off the money over a long period of time, but we're not making any money off money we raise in the first several months, And so that's, to your point, I could not agree with you more. Like I couldn't. You were dead on why that metric is significantly more important than actual net profit. Net profit's cash conversion cycle, why that's important. Because if you lose money and you have a negative net profit or you're not making enough, well, you've got to be able to stay in business. You got to be able to pay for your customer acquisition costs and have the money to do it. And if you don't have the means to do it, you better be generating money in order to do it, right? At the end of the day. And that's the challenge. And that's why some of that stuff matters too.
Yeah. No, this is super, super interesting to hear how you think about it. And when I think about that kind of stuff, I'm like, lifetime value for an investor, for a lot of them, it's like, let's say you're wholesaling. It's pretty much a wholesale fee, Maybe in 30 years you'll buy their next house, but it's pretty much wholesale fee, right?
Yeah. Which is why I started a wholesale company for a year. We did 1.2 in our first year of business and I shut it down.
Yeah, yeah, because you like the lifetime value. Although I can tell you, we see our clients all the time. They're like, we're like, you got 10 deals from this and you're only reporting $40,000 in revenue. So you're coming to us saying your return on investment's bad. And then we find that like most of those deals, they like held or something like that. And they're reporting like $0 is the value that came from them.
Yeah, they burn modeled it or whatever.
Not exactly true. You know, it's not like that's, there's like nothing in that, you know, there's a forced way to reverse engineer value. So, but
100%. And that's a challenge that most of our clients at Accruity don't really understand, right? It's if you're keeping it, you found something off market and used Bateman to find a property off market and you burn model and invested it. Well, you didn't actually make a return. You didn't flip it. You didn't make the 40 grand to 50 grand on the flip. But you have a property now. You have cash flow from the property potentially, but you have the wealth savings, the tax benefits, and all of that. How do you put an equation, you know, or a number on that? What most of them do, what we did early on was just slap on a wholesale fee for our metrics internally, right? To say, hey, look, it produced this wholesale fee, add that to the deal. So we can say, hey, that money we spent off market produced us X in a wholesale fee, right? To be able to run the metrics to say, we can't take this all the way to a burr because it's no longer relevant and it's impossible to value $120 million real estate portfolio that we've built. How do you value that? It never actually produced us profit from a revenue and a profit perspective for all the money we would have spent in marketing over the years. It's just impossible, right? At the end of the day. And so you've got to put a number on it.
yeah, totally agreed. So to wrap this up, I do want to make sure people know how to get a hold of you. If you don't have that stage 5 or level 5 or whatever you said, Casey, kind of describing how financials can look, consider it. You know, you know, financials aren't like that report card in that class that you're failing. You know, it's what helps you actually be really good at the class. And here you have an investor. You basically have an accountant turned investor turned accounting company owner, which is pretty cool that there's somebody who like actually specializes in this space and can help you, right? So if somebody wanted Accruity to help them with the financials, how would they do that?
Yeah, I would say is, Brandon, we should get a link together. That way we can, track it or whatever. But what I would say is Accruity.com is our website. Jump on there and click a button. Let us know you heard us on this and you're intrigued and you want to have a conversation. Feel free to follow me on socials, Casey Quinn, Casey on Facebook, Casey Ryan Quinn, Instagram. Accruity's on Facebook too and on Instagram. We're always putting out a ton of content. So if you want to come follow us to just get more information on a lot of this. Right now, tax season, year ended, and we've got a lot of folks there. So if you don't have a tax accountant there really helping you there on the strategy side, as well as just filing your taxes for 2025, we certainly would love to help you. We focus on real estate investors, service-based businesses in the real estate space. We're really good at too. So, we'd love to help you. We're here, the last thing I would say, right, is like, look, we're very different when it comes to our business because we are in your shoes, right, as real estate investors, as service-based businesses in the real estate space. We're in your shoes, so we get it and we understand it, and we're here. We want to help you because, my lifelong journey has always been about building happiness, transforming lives, and strengthening the community. And what I realize is so many people struggle with this stuff, right? And we have a gift and we've been able to really build a firm that really help folks. Certainly, yes, we have pricing and we need to make our metrics and hit our KPIs, of course. But, we're really here to do this thing the right way and really help our clients win and succeed. And we'll always be there for you. We're never going to try to do anything that doesn't make sense from that standpoint. So, we're here if you need us, follow us online if you just want to continue to learn more. And, worst case, use some of this information to really challenge your current CPAs, your current accountants, your current bookkeepers. If you have in-house staff, challenge the hell out of what they're doing. We offer a great insights package, which, the insights is a one-stop. We just come in and say, hey, we're going to take the hood up underneath your business. We're going to look at everything you have going on and tell you all the areas you're all completely wrong in. We're going to give you a roadmap to fix that, right? Because it's hard to get in bed with accountants, and a lot of people are scared to kind of open up the hood to show people, right? They're scared of what they really have going on. And so we've been able to really help a lot of people off the edge. If you're out there and haven't filed taxes in several years, we'll clean you up. We'll get you taken care of. We sign NDAs, so you don't got to worry about the world knowing about that stuff. We're here to help. That's what we want to do. So reach out if that's something that resonates with you.
All right. Amazing. Thank you, Casey. For everybody listening, we'll throw the link in the description here, and I will see you next week.
Appreciate you.